Okay, strategy 2A. Strat 2A is a strategy which intends to capitalize on true consolidation. True consolidation would mean that fundamentals are fairly equal while price trades in between two respective demand zones. Strat 2A is based on knowledge that price will not and cannot break an area of historical sensitivity without fundamental support, which I also like to call air support. Zones are a battleground between buyers and sellers, and price will trade in between until there is enough air support or fundamental support to break its push either to the upside or to the downside. Strat 2 aims to capitalize within the full consolidation range. Okay, we'll get to characteristics. Now, the thing what Strat 2A means, so let's go to the charts. We'll come back to the characteristics. Let's go to the charts. So in the charts here, what do we see? Here's our monthly, weekly, daily. Okay, but what we can see is in between our weekly, which is a significant level of sell pressure, and in between our daily, which is a significant level of buy pressure, other than this spike and up to the downside, we have significant respect at sell pressure and buy pressure. Okay, so we know we have significant battlegrounds. That's characteristic number one of Strat 2A is prices in consolidation, not in between the 15-minute time frame zones, not in between the 1H, but in between significant zones, higher time frame significant zones. Here we have the weekly, here we have the daily, two significant zones, prices in consolidation in between. Okay, then when we take it, let's zoom in a bit. What we're going to do is we're going to zoom into this level of consolidation. So as you can see, we do have historical consolidation that goes even further back. Obviously, I couldn't fit it in this picture. Okay, so we know that this is respected levels of sensitivity. So as we bring it in, what we can see is that every time price makes contact with level of sensitivity, it fails to break either to the upside or to the downside. Now, this makes sense, right? This makes complete sense. Let's think about this. Assuming hypothetically fundamentals in this case are flat. So let's say this is like Aussie yen, okay? Just for example, doesn't matter. It could be any pair. Let's say this is at a negative 0.4 and this is at a -1. So fundamentals are close, they're flat. That means what? That means, do you think buy pressure will have enough power to break, or fundamental support, air support, to break sell pressure at its weekly zone when fundamentals are flat? Absolutely not. There is no fundamental support. That's why sell pressure will win this battle. When price makes its way back down, do you think sell pressure will have enough sell pressure will have enough fundamental support, air support, to break buy pressure to the downside when fundamentals are flat? Absolutely not. So strategy 2A is when price is trading in between two significant zones, when we have fundamentals are flat, we look for the full range of consolidation. We look to profit that full range. So as you can see, we will have TP1s, of course, but for this example, I'm just showing you that we're placing buy limit order at the bottom, full range. We're going to close out, sell limit order, full range, close out, buy limit order. And when will these types of trades be entered? When we're in between two levels of significance, when fundamentals are flat. Okay, we look for the full range. TP1 will be taken 50% of the way as sell moves to entry. That doesn't change at all, ever. However, we look for the full range of consolidation. Now, okay, so let's take it to the characteristics. Cool. Fundamentals are close in strength. They have to be very close in strength because remember, buy pressure, sell pressure there can't be too much strength in one or the other, or they could potentially break with air support. Clear consolidation range in between two significant, I'm going to add right there, significant demand zones. Horizontal respect with limit of historical stop hunts. Okay, so when we take it, it's important to understand when we enter on strategy 2, we're not entering on the daily time frame. We're going to be looking at 1 hour zones, 1 hour time frames. We're going to be looking even at like the 15-minute price action before potentially placing an entry and whatnot. We're going to start to look at the lower time frames. So with that, we have to be understanding that there can't be too many stop hunts. So for example, what are limited stop hunts? That's condition 3. So what does that mean? Well, let's say there was a stop hunt here and then a stop hunt here and then a stop hunt here and a stop hunt here. Would we want to place limit orders? No, because we know that there's stop hunts. Our SL will probably be taken out before a move to the downside. So in that case, we want to wait for the stop hunt to happen. Okay, so when it says limited stop hunt, we have to look at historicals and we say, okay, is there actual sensitivity or is there a bunch of stop hunts happening? And if that's the case, then that's not a condition for Strat 2A. All right, so Strat 2A in summary, as you can see, we're looking to capitalize on the full consolidation zone, consolidation range. And you'll see here for Strat 2B, why is it that there's no sell pressure here? Or why is it that on Strat 2B, I'm only showing buy pressure on one side instead of on the other? Whereas Strat 2A is full consolidation. We're going to get to that right now. Okay, so Strat 2A, full consolidation range. Strat 2B, okay, or target conditions, okay? Strat 2A aims to reach TP1 and TP2. Okay, TP1, we close half our trade, half the units we take profit. At TP1, we move SL to entry. We risk a maximum of 1 to 1.2% of account balance. David, why did it change from 2% to 1%? Strat 1 saying 2%. Why are we doing 1 to 1.2% here? Because when our SL, you got to remember, these are really tight SLs. Okay, these will be really tight SLs. That means our value per pip is very high. We don't need to be at 2% risk. 1% risk, our value per pip will be very high. These are quick in, quick outs. Okay, 1 to 1.2% risk.